Today we're going to talk all about how to skip 2 payments when you're refinancing your mortgage. All right guys, let's talk all about this. This is the old trick in the book as to how to not have a couple of payments when you're refinancing your house. Now, first and foremost, I've got to say you can skip the payment, but it doesn't mean it's not being paid for. And let me explain. Here's basically what happens. What a lender does is they collect interest for the time between the loan closing and the time that you're going to make your next payment. It's called prepaid interest. So basically what they're doing, it's also called prepaid taxes, and what you're doing is you're actually rolling those expenses to be part of your loan rather than bringing it out of your pocket. So there's some pros and cons to this. First off, it's not like you're not making the payment. What you're actually doing is you're increasing your loan amount so that your loan amount covers it, so you don't have to make those 2 payments and it gets paid out of the loan proceeds as part of the new loan that you're actually getting. And so what happens is if you owed $100,000 on your house, you would actually now owe like $105,000 on your house because of prepaid interest, prepaid taxes, prepaid insurance. Prepaid basically means that if you're not paying it, they're increasing your loan amount in order for that to get paid, and it's being paid in advance as part of the closing. So you got to realize there's nothing free in life, and neither is this 2 months of skipping payments, but it may help from a cash flow perspective. If you're really tight on cash flow, if those couple of payments could help pay some medical bills or something else that may going on, it might be a good solution for you. So how do you go about doing this? Well, first off, you want to close early in the month. And you want to work with your mortgage broker directly and say, hey, we would like to go as long as possible without having to make a payment. So what you'll typically be doing is closing sometime around the 15th of the month or the 13th of the month. And then what you'll be asking for is to pay for that month and for the next month. So it'll be about 45 days worth of prepaid interest that'll be included in the loan. Now, with the interest, however much is your daily rate for the interest rate, that's how much will get accrued, and that's how much will be getting paid towards your prepaid interest, which basically does is it just prepays the lender, and then they can pull that money out, which covers the interest for that amount of time, and in doing so they increase your loan amount in order to cover those prepaid expenses. That's how the world of prepaid works. So it does, you don't have to make those 2 months worth of payments as long as you've worked out with your mortgage broker so that your prepaids include enough to skip 2 months worth of payments, but it is increasing your loan amount so that you will pay that off over time. Now, the downside of paying that off over time is you're now paying interest on it, and you're paying a really high interest rate, right? So if your interest rate is 5% or something, you're going to be paying that interest over a long period of time. So those couple of months worth of payments, you're going to be paying them off over a 30-year period, which can get quite expensive. It'll be probably more than double. So basically, if you borrowed $5,000 extra for your prepaids and expenses and those things, you're going to pay more than $10,000 back. But you'll be paying it over 30 years rather than having to pay it over 2 months, which may be advantageous for you. So there's pros and cons in skipping 2 months worth of mortgage payments when doing a refinance. The pros are you don't have to make those payments for 2 months. Maybe you could use that money for something else. The cons are it's being added to your loan amount, and you are going to be paying that over a long extended period of time. It just depends on your personal situation. Now, for all this to work appropriately, you've got to talk to your mortgage broker, let them know you want to go 2 months without making payments, figure out what those prepaids are going to be so that they can be calculated into the loan amount, and make sure that you're all above board. What you don't want to do is just try and skip these payments. You want to make sure you're working directly with your lender so that they can help you in structuring those prepaids accurately in order for you to skip those couple of months worth of payments if that's what you want to do. On the other side, it's probably worth doing a calculation to see how much it's actually costing you to do that prepaids over the 30-year time period, because you may decide it's not worth it, and you may decide it is worth it. There's pros and cons on both sides of the equation here. I hope you've enjoyed this video. If so, please hit that thumbs up button. It tells me I'm doing a great job and you want to see more videos like this. And also, please consider becoming a subscriber to our Do Hard Money channel. Now, I've got a couple of things for you. If you'll text me your email address, 435 294-0433. You can get a copy of my book, How to Get More Money Than You Can Ever Handle, a real estate investor's guide to funding deals, absolutely for free. It sells at Barnes & Noble and Borders and Amazon, but you can get a free digital copy if you just want to text me your email address to that number. Also, I've got another video about how to refinance BRRRR properties. If you're not familiar with BRRRR, it goes into that and talks about how to get those refinanced. I'll put that video on the screen so you can check it out. I also have a blog post on can I cash out refinance a rental property. If you want to read up on that, I'll put that in the comments below as well. Otherwise, make it a very profitable day, and bye for now.